G'day guys, and welcome to a special edition of the Catapult Wealth Market Update. Today we have the pleasure of having Max Riaz. He is the director and co-founder of Banyantree Investment Group with 22 years of experience as an analyst and equities manager. Thank you very much for having us, Max.
Hello, Tim. How are you going? Yeah, no problems.
All right, mate. Look, thank you very much for your time. Today we're going to talk about blockchains and cryptocurrency. This is a very regular question we're getting. And obviously with Bitcoin coming off quite a bit from its highs, a lot of people are talking about it, speculating maybe it's an interesting prospect to think about.
Yeah.
Take it away, Max. Just tell us, what do you think? I mean, just kicking off, tell us a bit about crypto and blockchain and how that technology all works.
Yeah, look, thanks, Tim. I think crypto comes second, blockchain comes first. For just a quick on the technology, I mean, blockchain technology is basically database systems that are in no particular person's purview or control. So that sort of structure or base foundation lends itself to, an open architecture. Like in the old days, there was I forgot the name of the actual system, operating system, but it was an open architecture, computer operating system. But nonetheless, blockchain is an open architecture database system where anyone can write in, provided they follow certain algorithms and rules that are set to basically write into that ledger. So that started off with Bitcoin on the ethos that they wanted to. So the originator, whether it was a person or some group, obscure group, who knows, but it has been taken on as a sort of a alternative reserve coin or currency, i.e. Bitcoin, that they wanted to create just after the GFC, because the central banks all over the world were just printing fiat currencies, dollars and euros, hand over fist. So this group said, look, we know all that money printing is going to lead to losses of the value of that or those currencies over time. It's just supply and demand. The more of it you put out, the less value it will have over time. And if you look at all the fiat currencies, I mean, incorporating inflation, they've lost value basically. So gold has been a traditional reserve to safeguard your depreciation of your currencies over time. But this is a digital form of gold, as some would put it, Bitcoin. That people are sort of starting to park their capital in. But look, it's very volatile. It has absolutely no commercial use. It's just a digital coin. If you can store it in the right place that it doesn't get stolen. There's been examples that these crypto, let's call it a crypto note or coin or whatever you want to call it. It's just a digital sort of a record. If you hold it in a cold wallet, offline, on a USB cord, USB stick, you are susceptible to losing, the password protection on it, or just lose the USB stick altogether. Some fires can happen, or you can just misplace it, and that has happened. Or you can store it on exchanges. There's innumerable exchanges popping up everywhere, where you can hold your Bitcoins and other emerging currencies in the digital form. But some have gone bust over the years, and some haven't. But that's what's going on in this space. Let me just take you through. There's been some people calling blockchain or distributed ledger, open architecture ledger or database system is the next revolution of the internet. It is to some extent probably just going a step too far, to be honest, in describing it as such. But look, when the internet started, the main issue was people could log on, people could talk to each other, but they didn't know, whether they could trust the other party entirely if they were trading goods and services with them. So if I was selling something to Tim, I'm not sure whether Tim's going to basically pay me at the end of the day, So there were other sort of intermediaries that propped up, such as eBay, Amazon's of the world, and they said, look, we'll stand in between Tim and Max. Max is going to ship something out of another part of the world, and we know Tim, he's logged on, he's got a PayPal account or another form of account that we can see that he's got, and if he doesn't make good on the payment, we'll stand in between. And they took obviously eBays of the world and Amazons, they take it, obviously they charge in between, and those charges can be not insignificant. And similarly with the banks, and I'll tell you how blockchain and crypto is solving their solution. So equally, if you're trying to transfer money from Australia to another part of the world, in the old days it could take 2-3 days to get there, sort of clearing between different banks along the way, and they will charge you arm and a leg for transferring your own cash to someone else. So then came obviously this blockchain solution, where effectively it's Tim's profile is onboarded to that blockchain ledger. There's millions of other sort of, let's call them administrators of that database systems that say Tim is who he says he is, and Max is as he is, as the someone who's making products and selling it. And we've got years worth of data on these two guys making good on their payments and products. And by the way, we can see that Tim on the distributed ledger, he's got say $100,000 worth of coins that he can use. We can see that he can use to pay for the goods that Max is going to send. Okay. So let's say this is how the transaction works. There's no intermediary in between now. So Max is going to set up a smart contract on Ethereum or some kind of an exchange, global exchange, and Tim has got the coins. Max is going to say, okay, I'm going to send you, Tim, $50,000 worth of whatever it is, widgets that I'm about to sell to Tim. Automatically through that smart contract, it will have sort of the algorithm in there will secure Tim's $50,000 worth of coins against that contract without Tim having to press the button or anything. Once he agrees to the contract, that's what's going to happen. So I know that it's going to get paid as soon as I release it, and that's what will happen. So so there's not going to be any intermediaries in between. So that's cutting costs down. Equally with the banking channel. So if I'm trying to send money over to another part of the world, it's basically instantaneous. Again, similar format, no banks in between, and you're cutting down on time, quick payments, and obviously the cost of doing business. So that's what, a couple of examples of how blockchain and cryptocurrencies are sort of changing the world, if you will. But these are some of the headlines. Commbank has come up in their, on their app, the ability to store Bitcoin and Ethereum and various other coins if you hold them. And you might wonder, well, how come Commbank is getting involved in these sort of things? Well, banks have got an issue. If people start to, let's say I earn X amount of dollars, let's say $3,000, $4,000, $5,000 a month in salary or whatever it is, and I'm holding it all in an app in digital form outside of my bank account, and much of my purchases are online, or I can just hold my phone and pay with a digital currency, let's call it with some kind of crypto, and go and pay for a coffee or lunch out or buying a car or whatever. And that's all that value of currency. I've got it in some app that I'm quite comfortable in, let's say. It's outside of the banking system altogether. So I'm not holding that $4,000 or $5,000 that in income that I'm earning on a monthly basis any longer in the bank. Now, banks got an issue with that because banks are using that depositor base to lend out to, into the mortgages and personal loans. So where are they going to get they're going to lose that depositor base. So that's why the banks are trying to bring in the holding of digital currencies within the deposit base, so that people don't start walking away entirely from the banking system. So that's the issue that the banks are trying to solve. And obviously, then you may have heard, the RBAs and the Federal Reserve in the States and China coming up with their own digital currencies. Well, it's the same thing. They know that people have sort of, losing faith in, and they, probably fairly so, losing faith in fiat currencies because there's just so much of it slushing around. I mean, the fact that housing, market has gone from, average house price in Sydney has gone from $500,000, 10 years ago, median house, it's now over $1.2 million. Well, it's all that extra currency that's just moving around in the system, whether through the banking channel and the loans that are being written out because RBA's is printing more money to give to the banks who can then lend it out. So if all it comes down to is my ability to actually take out bigger loans because, interest rates have fallen. So it's just more currency going against the same house. And so more people are sort of bidding up the prices. So you're already seeing the, loss of value. So the dollar that bought you $500,000 house, 10 years ago, that same dollar, you need more of those dollars to buy the same house. So that's the issue. And that's why people are sort of going, well, gee, where's it going to go? So that's why they're sort of starting to wonder whether they need to move into other forms of currencies, and central banks have cottoned on to that, and they're going, well, they've got to come up with their own solution, which sort of looks like digital currency, but not really. They've still got control of printing it. So, but it's not fiat currency. So it's going to be Australian digital dollar. It's not Australian dollar. It's going to be digital renminbi, but it's not really the old renminbi, but it's still the same fiat. It looks like a monkey, acts like one, probably is one. So that's why you still got they're trying to compete with digital currencies like Bitcoin, which are, for all intents and purposes, completely democratized in terms of no one can print them willy-nilly. There's a ceiling to how much they can be printed, and that's it. That's what we're trying to walk away from, and these central banks digital currencies are not really a full solution to them, but they'll have a go, and you'll see more of those come through.
So with one of the big things that crypto bulls talk about is that there's a finite number of Bitcoins that can be created due to the algorithm.
Yeah,
with a central bank created coin, that's different, right? There is a unlimited supply.
100%. Well, 100%. I mean, the central banks. I mean, if you talk to the guys in the funds management space, they're calling it, what's the term? Money printing. They don't even call it money printing. There's another name for it. It's a nice name, academic name. Basically, monetary theory, 2.0 or whatever. Basically, what that means is banks, central banks, governments can run fiscal deficits. That is, governments can spend more than they can collect in tax revenues. Okay, and they can fund those extra expenses by asking their central banks to print more money, and central banks will do exactly that. Traditionally, governments have gone out to the debt markets and raised loans, i.e., the government bonds, but any excess funds that they need, they go to the central bank and they print money. And this, example is Federal Reserve, RBA as well. Federal Reserve, their balance sheet, they call it, let's just call it a pool of currency, is doubled in just over the last couple of years because of trying to solve the COVID issues. So all this, government sort of funding that's going into, and obviously that's helped as well because, the sky hasn't caved in, and people have been able to sort of, feed their family and all that sort of stuff. So there is some, social value to this, printing some kind of money. But look, that's what's happening. But what happens is someone's getting punished here, and the ones that are getting punished are the ones that have lived frugally, saved all their lives, and sort of going, well, I'm not going to take too much debt on, and they're the ones who've been punished. So, if you've been a pensioner or you've been saving to retire so that you could have a nest egg, which you can, earn a decent income on, well, you've been punished because you used to earn 6, 7, 8% once upon a time. Well, that all those interest rates have been run down because, your dollars are not welcomed anymore because, you can turn to cheap dollars from the banks who go to the central banks for more cheap dollars. So we don't need your savings. We can go elsewhere for cheaper dollars. So that's the issue. So someone's paying and these savers are paying. So, if you're taking debt hand over fist, quite frankly, you've been rewarded for your, just your risk taking.
Yes. Okay. So blockchain technology in itself has many wide uses, and around efficiencies and bureaucracies and timing. And then you've got cryptocurrency itself, the actual currency is a solution to people who don't have faith in fiat currencies. And we're seeing that a lot in emerging markets and other countries like Venezuela, especially countries where there's risk of hyperinflation, where this is seen as an alternative store of wealth that's not reliant on governments and central banks.
Yeah, 100%. So if you look at, I've got the chart here somewhere, but I'll talk through it while I'm looking for it. The countries that are the biggest adopters, let's call it, on individual basis are all these countries that have got hyperinflation, as you say, or inflation just run away because their governments are printing dollars that no one else wants to trade with anyway. The reason why we get away with it in Australia and other reserve currencies because the rest of the world is using those currencies to trade. But if you're in Nigeria and their central bank is printing money hand over fist, no one cares about Nigerian, whatever the currency is. No one uses it for trade. So it leads to hyperinflation in all forms. So what people in those countries is going, well, the savers particularly, they're saying, well, I better run towards other forms of saving money and preserving value. And yes, they are turning to Bitcoins and other forms of digital currencies. So you can see Nigeria, Vietnam, Philippines, all these sort of dubious governments in some respects that sort of mismanage financially. But that's on the number of people. So Vietnam is 21%, quarter of the population, almost, sort of owning some kind of cryptocurrency. But if you look to the developed countries such as US and Australia's up there somewhere, almost halfway down, in terms of the value of currency traded, the dollar value is actually by and large is monopolized in the developed countries. Smaller base that is investing in cryptocurrencies, but they've obviously got biggest financial wherewithal. So that's worthwhile looking at, just sort of seeing what the activity has been. But so that, this is share of people investing in cryptocurrency. So these are some of the more sort of well-known ones that people are sort of taking a bit of a plunge in. Bitcoin is the main one, Ethereum second to that, and Dogecoin and Bitcoin Cash. So that's sort of what's happening in that respect. But look, theft is on the rise again. It's just like having piles of gold reserved under the mattress at home. People are going to find out, and crooks are going to cotton onto it, and the word gets around. There'll be a knock through the door while you're not home. So similarly, digital currencies are. There's plenty of hackers. In fact, I was talking to a guy who knows a thing or two about cybersecurity. So the biggest and the smartest hackers are actually, I don't want to highlight them, but Eastern Europeans. So and I said to him, I would have thought it would have been somewhere in Asia, but no, that's Eastern Europeans. They're the smartest ones. So but anyway, for what it's worth, if you're holding digital currencies, the biggest issue is obviously one of the big issues is obviously it's volatile. So Bitcoin can be close to $100,000. Other times it could be close to 20. So it's volatile. That's one issue. The other issue is when you're holding it, it could be someone might take a swipe at it, or it might be held in an organization that just goes bust. So there's been a couple of examples of it. That's why, if you want to think about it, you want to deal with not a local Johnny come lately exchange, i.e. think about a local sort of what's the term, local bank or something, like local credit union versus dealing with a big bank such as Commonwealth Bank. So that's the sort of difference you've got to have in your mind when you're storing your funds, digital funds. So there's a company called My Crypto Wallet or something. They had about 20,000 customers in Melbourne based, Australia wide. It was started up by a 27-year-old in 2017, and at the end of it, basically it went into liquidation, and people lost their wallets, and there was a big issue, and people claiming as much as $40,000 of losses. So that's what you've got to be aware of. These things can vanish. So I would stick to, if I was buying these things, these larger exchanges such as Ethereum, Coinbase is up there. Just ones with, large market caps, $521 billion market cap. That's a large market cap versus some very small exchange that runs into $5-10 million. So what does that buy? That huge capital base for these exchanges, the ones that are big, Binance is another one, that they can pay for the best and the mightiest security systems. So the smartest guys are looking after the security. So that's one thing to keep in mind. And I think I've got a chart here that shows average number of daily active users in Australia, where they're storing their crypto. So you can see the main one is Coinbase wallet. So most people have got their senses about them, so they're storing in the Coinbase. But there've been others popping up of late. Binance is all right as well. But others I don't know, to be honest. They're small.
So there's essentially 3 levels of risk. There's the actual market risk. So if you bought crypto or Bitcoin at the peak recently, you're almost down 50%. Then there's the exchange risk of what you've just said, of collapse, or we've heard cases of the external hard drives being locked, or the person dies and they've forgotten the password. And then there's the individual risk of your computer could get hacked, or your house could get robbed, or your USB. And so there's lots of things, and you kind of need to know a little bit about all 3 to cover your bases. And it seems like if you stick to the big guys and you stick to the big exchanges, that can provide some level or greater level of certainty. But the last part, that's on you. You having your IT cybercrime stuff up to date, that's 100% on you. If you don't understand that, well, then you're at risk.
Well, that's right, exactly. And you know what? There's and it's really popular. This crypto, currency is really popular amongst the retail small sort of accounts, and they're the ones who probably need the most protection. The guys who've we've spoken to family offices, they're considering it and that type of thing, and they invest a lot of dollars in safeguarding their wallets, cold wallets or whatnot. So so to get protection, as a small account retail investor, I would be going to the biggest exchange, seeking business from them, kind of thing. But this is just the Bitcoin trading volume. Bitcoin is pure sort of reserve of value. It's not a currency at this stage. There's been a lot of work done, and it continues to get done to make it cash equivalent. So you can use your Bitcoin to pay for coffee. So there'll be an app. It can just sort of take 0.0001% or whatever it works out to be of your holding to pay for coffee. But the issue is the transaction time and just processing on the Bitcoin network. That next ledger entry of your transaction by a miner is a process. It just gets harder and harder and longer. So there are solutions coming up where they're calling it Lightning Network, where it's actually sort of another sort of a database that's writing the transaction on the quick and sort of going, well, we'll eventually write it in the main database. That will take longer. And again, that will be a solution to that problem, but there'll be some charges involved with that. And you might be able to pay with your Bitcoin faster than standing around for 10 minutes. But there are larger, more expensive goods that I think Tesla's, you can buy using, they're worth over 100 grand. So, it's worth your while sitting around using your Bitcoins to do that transaction. So, but more day-to-day transactions, you really need to look at other options, which are emerging. There was a survey done amongst the professional investors as to, where are they seeing their needle move in terms of thematic investing, and are digital assets, including cryptocurrencies, on the horizon for them? As you can see, between US, Europe, and China, there's still not a lot of huge interest. I mean, 12%, as denoted by red sort of maroon color there in the US, by the institutional managers. They are reading a lot into this space, but the traction is not taking place because of the volatility in the price. And those large pools of funds is going to be another sort of baseline for holding the value. So these guys, once they start to play in this field, they tend to hold on to their assets. So you do need the digital assets to start seeing flows coming through from big end of town. But at the moment, they're pretty much focused on the blue one, which is the internet and technology thematic, with bet on the environmentals. Environmental is another one that's keeping a lot of people preoccupied at the moment. So digital assets are competing with, ESG sort of assets at the moment, and internet. So they're the big themes at the moment in the market and professional investors.
Yeah. Okay, Max. So for the people watching at home, there's two ways to invest in crypto. There's the actual technology itself and some hardware applications. Then there's the physical coins.
Yeah.
And there are some ETFs coming up listing soon, not yet, but you can either do it direct with the exchange or through an ETF. What should investors at home be asking themselves before they plunge into this world?
Well, I think you need to have a philosophical view about this. Like, I mean, what's your reasoning for buying crypto? I've had plenty of people just messaging me going, "Oh, so-and-so, whatever." I'm not going to say the name, but it's going to double. I mean, what does that mean? I mean, I didn't even go and check it out, to be honest. It's just like, don't speculate. First and foremost, do not speculate. The second reason, a genuine reason, would be, okay, I have a view on fiat currencies. I want some kind of a hedging against, ongoing depreciation. Okay. Then you've got to take the long-term view on that one. So that's because, if you buy a position in Bitcoin and you do buy into the fact that it's capped and supply is limited and demand will continue, because you can see the behaviors of central banks not changing and governments not changing. So that means you are taking a view on fiat currencies and you want to hedge, and you've got bid in the gold and you're going to have bid in the Bitcoin or whatever. So, okay, so you're going to hold it, and there's a view there. Then you want to actually play separate to that, you want to actually play the blockchain story. We talked about the next internet, or how blockchain is disrupting different industries. So in that respect, I would go to blockchain orientated businesses, i.e. exchanges, such as, I don't want to name the name, but like, Coinbase or Ethereum or whatever, where they're actually building up a commercial business case for using their blockchain infrastructure to build what they call a DeFi network, where you can own the coin, Ethereum coin, to reserve your as a dollars, as alternative to Bitcoin, but you can also lend that digital currency out to people who want to borrow it for legitimate purposes. But you need to do your work there, because there's a lot of illegitimate lending going on at the moment for whilst you're not speculating your currency, digital currency, you're lending it to someone else, and they are sort of speculating on it and paying you some nominal amount along the way. And if they go down, it's all based under the smart contract. So I would think about probably exchanges as a way to invest in, to think about how they could continue growing their services out and make revenues and make profits, which eventually will grow their value of their business, and you can be an investor in that respect. So they've got to have a business model you're investing in on blockchain. So that would be my next opportunity that I would look at in terms of blockchain crypto investor, apart from just a currency reserve.
Yeah, given the correction in the Nasdaq, at least it makes sense. At least you can understand what's going on.
Yeah, exactly. And you know what? To be honest, Tim, this time around is a bit different to the first internet, because people could understand, people could see, websites like that. That's what the thing was back then. Late 90s. You could get a website address. You could put your own website up, and it was easily done. But blockchain is sort of a technology. It really is behind use cases. You won't see it. You will just, like, the manifestation of it in the commercial sense, you won't even see it. You'll have to see how it's being used. The best you're going to get of it is basically the digital currency that you can hold in your own, some kind of a digital wallet. But everything else in different forms, how it's being used, will be behind the walls in technology somewhere in the systems behind organizations. You just got to sort of make sense of it, how it's actually disrupting and creating new business models, such as Google equivalent in that space, which is Coinbase's of the world and Ethereum's.
Look, Max, thank you very much for your time. I think that's excellent. And for the viewers out there, please be careful. There's so many stories of pump and dump scams, rug pulls. There's even been crypto-related pyramid schemes. I've seen there's some influencers who are spooking cryptos. They're not even holding the crypto. They're getting paid a commission. Yeah. And then they spook it. They don't really care about it. So please be very careful. This space is very dangerous and very fraught with scams. So just stay safe and just really think about what you're doing before you do anything at all.
100%.
But anyway, thank you very much for your time, and thank you very much for dialing in, guys.
Thanks, Sue.